Hi, I'm Jane Hampshire. I'm from FireDogLake.com, and I'm here with Rob Johnson, who is on the board of the Institute for America's Future. Rob, thanks for being here, and I wanted to ask you a little bit about the PPIP, the Geithner Plan. What do you think about it?
Well, I think it's a devastating mistake. The PPIP does a number of things. First of all, it incites people to believe that the Obama administration is favoring donors and financial cronies relative to the markets as a whole. Even hedge fund managers are saying they're morally conflicted about whether they ought to take part in this program because they feel like they're taking advantage of the body politic. And they probably fear that in retrospect, if they make a lot of money, they'll get called before Congress and be considered complicit in corruption. Secondly, I'm very concerned that the PPIP is leaving in place the too big to fail and too big to resolve institutions. If you were to nationalize, restructure, and reprivatize right now, you could change the structure of the financial system in the United States in a way that would not leave us hostage to these big firms going out into the indefinite future. Finally, the budget costs. The pure subsidies could cost $850 trillion. While the administration says it can't get money from Congress, the administration could go spend that kind of money, and you know and I know that a year and a half from now, all the Wall Street guys are going to be back pleading fiscal discipline after they get theirs, so that you can't have health care, you can't have Social Security, it needs to be cut back. And many other aspects of infrastructure, other dimensions of what you might call overdue public infrastructure will fall by the wayside because they added more and more to the debt burden of the United States. Finally, the Chinese are raising a very significant signal right now. The Chinese are telling us we're concerned about the Fed's balance sheet, which is a form of the backdoor bailout approach. We're concerned that you're not being tough with the bankers. As Simon Johnson would say, you have your own oligarchy taking control. And as a result, we're concerned about the soundness of your we're concerned about the soundness of your fiscal policies for the future. These people hold nearly $2 trillion in U.S. debt. Like it or not, the United States is a debtor country, and the creditors are getting scared.
Well, are you concerned that the people who made these mistakes in the first place are still largely in charge of what happens? You've got people from Pandit, you've got Jamie Dimon, you've got Lloyd Blankfein. They're still at the heads of these companies.
Well, I'm concerned for the Obama administration that if they do not identify what you might call consequences for the people that caused the problem that spilled over onto the entire U.S. non-financial economy, everybody's pension fund, and the rest of the world in developing countries, that the United States will lose credibility. It'll lose credibility with its citizens. It'll lose credibility where people say Wall Street runs the administration. The administration doesn't run Wall Street. And when we move to the G20 meeting this coming weekend, the United States is going to go in and tell people, this is what we want from you, and they're going to say, clean up your own house first. Get your financial sector under control. You made this mess. You want stimulus, we want financial regulation. Unless the Obama administration steps up to hearty changes in financial regulation, resolution, and eliminating some of the executives who made the mistakes, no one will believe they're credibly in control, and we will lose power in the world as well as at home.
And what about the early March reports that the banks had actually done well? How do you feel about that? Do you have confidence that they actually are operating profitably?
Well, it appeared to be, in the absence of the notion of collusion or cartel, somewhat extraordinary that all of the major banks came out in 3 days and said, don't nationalize Citibank, everybody's doing well. We're having a great quarter. We can earn our way out of this hole. Many are concerned that the International Securities Dealer Association gave exemption, particularly for AIG, to overpay in credit derivatives, meaning AIG handed out more candy to the big banks and investment banks in the first quarter. We will want, as a society, to see those numbers and have the AIG subsidies netted out before we can diagnose whether those statements of positive earnings had any basis whatsoever.
But you think that's information that we should have?
It's information we definitely should have. It's the taxpayers' money.
And so you think that somebody should be subpoenaing this?
Yes. No question about it. In the United States, right now, these banks say, we don't need help, we're solvent, but then they receive the subsidies. You can't have it both ways.
Well, I guess the one last question I'd ask you is if you could take one thing and make it happen tomorrow. If you could make one change tomorrow, what would it be?
If I could make one change tomorrow, I would give the administration the power to resolve financial services holding companies and insurance companies like the FDIC can resolve banks, because then they would have no excuse not to engage in restructuring. And I think that that's a very important dimension. I would also, associated with that, tell Congress, you have to go down the path of resolving these things at a least cost, and you will have to appropriate more money. We are in a bad way, but this dribble and PPIP and keeping things on a capital drip system and forbearance is very, very dangerous. It can cost us trillions of dollars above and beyond what's necessary.
What about a financial transaction tax?
Well, I think that's viable, but that's not the essence of the cleanup we need to do now.
Yes.
It might be good for the public to feel like over the years to come, the financial transaction tax creates revenue that helps pay them back for the burden that they've just borne. But I don't think it's not at the core of resolving the crisis, and I think our macroeconomy depends on that.
Well, I also have one more question. I lied. What about capping interest rates for the public?
I think credit card interest rates and usury limits are absolutely essential to reconsider. 35% interest rates means if you have misfortune and you have a credit card balance outstanding, you get sucked into a vortex you can't possibly recover from. I would rather not have a credit card than have a credit card that had 35% interest rates. People talk about predatory lending in the old days. People talk about blaming the victims who bought these subprime mortgages, and that whole moral snarl is going to go on and on. But if you have a credit card with a 35% interest rate and you have misfortune, which many people do now with rising unemployment, there is no way you're going to get out of that hole. And I would rather deny credit cards than put people in that kind of trap.
Great. Well, Rob, thanks so much for being here today. Really appreciate it.
My pleasure.